happy to start. I introduced myself at the beginning of the last panel, but I have been at Kleiner Perkins for the last year and a half. We're very focused on early stage, so Series A with a bit of seed and a bit of B. And I personally focus a lot on fintech and consumer. I actually moved to San Francisco from New York like halfway through last year, so I try to invest a ton in companies back east. But yeah, that's kind of the quick on me. I started my career as a bond trader, a very different world, and then spent some time deep in crypto land. So windy path here.
Okay, I'll go next. I'm Marc Michel, co-founder of Runway Venture Partners. We are a New York-based venture fund focused on post-seed investing in B2B SaaS companies. So typically leading rounds of about $3 million in SaaS companies that have proven some level of product market fit, but not quite ready for a full Series A. I've been an operator and a venture guy for a long time. Founded Precise, which is a healthcare SaaS, didn't call it a SaaS company, back in 1999, which we sold successfully for about $300 million, and still around today. Does a couple $100 million in revenue as a health data and information company. And then I've been a VC now since the early 90s. Ran TD Bank's venture capital unit for quite a long time before founding Metamorphic Ventures here in New York, which was a pure seed fund for about 10 years, and then left there to found Runway about 3 or 4 years ago now. So that's me.
Do you want to nominate somebody? That's what we do with our stand-ups.
You're next then.
All right, perfect. Hi, everybody. My name is Reggie. I'm the founder of a company called Seasons here in New York. We're building a rental service for menswear and streetwear. We launched a beta last fall with 50 friends and family members exclusively here in New York. And we closed the seed round a few months ago as well. And we're just kind of heads down on product right now, chipping away while everything kind of cools down. So, Nick, I see you got the purple tee on, man. It's hard not to call you out.
Thank you. I guess that's why we chose this as our brand color, so that we can get called out. I'm Nick, founder of Pico here in New York, in Brooklyn. We are building sign-up and payment tools for internet communities. The internet's most passionate communities, that's how we like to say it. Yeah, so we raised our seed round beginning of 2019 from Stripe, Precursor, Bloomberg, and some other folks. Been thinking about a Series A, and given the pandemic, been thinking about it more. So excited to learn from all of you and get the temperature of the situation. Also, I'm eating my lunch, so I'm gonna keep myself on mute most of the time.
You have to nominate someone.
Oh, yes. Let's see who's right below me. Emily.
Thanks. Okay. Hi, everyone. I'm Emily. I'm the founder of Chorus. We're a matchmaking app where friends swipe for friends. We're trying to figure out more authentic and community-driven ways to online date. We raised a pre-seed last year with Brooklyn Bridge leading it, and we are gearing up to raise a seed later this year. And right now we're really experimenting with virtual dating because I don't really think virtual dating is going away. I think this will, like you were saying, Monica, like escalate the inevitability of some future trends. So yeah, really excited to be a part of this. And I will nominate Roman.
Yeah, it's Roman.
Okay.
Hi guys, I'm Roman. I'm a founder of Nutrient here in New York City. We're using deep learning to bring food as medicine into clinical practice. We're pre-seed stage. We just finished our product. We're looking to raise our pre-seed, And yeah, we're talking to first partners and hopefully get to revenue soon and raise our pre-seed. Let me nominate Kaya or Kaya.
You got my name right the first time. That's very impressive. Yes, Kaya. Also, side note, my bird is screaming in the background. It's not a human. But I'm Kaya, founder of SwayPay. We are an alternative payment method similar to Affirm or QuadPay that plugs into online storefronts and allows shoppers to pay with social media posts as currency. So for example, you go to tshirtstore.com, you see a $100 MSRP t-shirt, and you get the alternative option to pay, for example, $50 and 2 Instagram posts featuring this t-shirt. So you check out with us, you pay $50 up front, and then you make your posts after receiving your item. And if you don't, you're auto-charged the remaining balance. So kind of a marriage between fintech and consumers / social media, believing that, social media influence is going to end up becoming more ubiquitous as a currency, coming downstream just from the top 1% of social media population that is considered influencers today. We are pre-seed stage. We closed our round. Barclays and Anthemis were our leads. Heads down building product, and probably not going to raise any more until maybe like 18 to 20 months from now. I'll nominate Serene.
Hi, yeah, Sareen. Good to meet everyone. I'm the co-founder of Visible Health, which crowdsources early childhood information from other parents and then matches it to parents of children who have similar conditions. Our market is broadly early childhood health, but we're starting with special needs parents who are highly engaged and most acutely feel the fact that the medical systems and the education systems aren't giving them enough information to help their child. We raised a pre-series round in December, and we're looking to raise at the end of this year. And my co-founder is a data scientist, and I am a parent of a special needs child and also have been within the tech industry for several years doing go-to-market and building up sales teams. So we feel pretty good about our collaboration, and we'll hopefully be releasing our first product in about 6 to 8 weeks. Good to meet everyone. I nominate Nick. Did I?
Oh, I went.
Sorry. Sorry. I'm on my phone, so I have different tiles, so I can't see who's already gone.
All good.
Reggie? You gone too?
I've also gone. I don't think Daniel's gone though, so let's give it
Thank
to him.
you. Okay, Daniel.
Yeah, I'm happy to go. Thanks. My name's Daniel. I'm the co-founder of We Are the New Farmers. We are an indoor agriculture company that grows edible algae in a carbon neutral manner. And you can call me Farmer Den if you want to. I'll nominate Brittany. Is Brittany still on? Yeah.
Hi, I'm Brittany. I'm a student at UC Berkeley. I'm here to assist with technology, so I'll be recording this session. Yeah.
Well, great. Why don't we just throw it out for questions for folks, and then everyone can hop in with the answers.
I'm happy to start if no one else has a question right now. So I'm just thinking about starting a seed round with our company and wondering, starting a round from scratch right now with no checks in the door, what's a good way to build momentum given the current environment and put a little bit of a sense of urgency around things, even though people are being very cautious and not necessarily moving that quickly right now.
Monica, you want to answer that?
Sure. I think, I think that the most distracted period is actually over, at least for now, unless things continue to escalate again. And so in some ways, I think you are in a position where investors are mostly, I think, back and fully focused on at least vetting new opportunities and such. Things may move slower, which I think you're right about. One of the things that I've seen, if you've built any relationships, I would definitely lean on those to kind of kick these conversations off. And also I find often, the beginning of fundraising is a little bit of vetting the story and building all of that. And so you can kind of sort of truncate that very quickly with people that are already in your court. I also think I'm seeing a lot of rounds where they start to do a soft close with angels. You have a bunch of these people who are able to commit capital a little bit faster, and then you can get, say $1 million of $3 million under your belt that way, which is both helpful from a cash flow perspective and from a momentum. Then they can also become your advocates and introduce you to more folks. And so I'm seeing that strategy deployed more and more, and it kind of makes sense in this environment.
Makes sense.
A lot of it will depend on, how impacted is your business by current circumstances. Not every business is experiencing the same level of pain. Some are actually thriving in all of this. Some are just doing product development, which, the circumstances don't impact really very much at all. In fact, it may be easier to recruit in this environment. So, it really depends on what your needs for generating, how near-term your needs for generating revenue are, and how impacted that revenue stream is by, the current circumstances. In the meantime, I think that you should be, spending a lot of time identifying who the right VCs are for your type of product. I unfortunately still get tons of introductions and unsolicited approaches from companies that are not even close to being a fit for what we do, and yet it's very clear on our website what we do. It's pretty narrow. So, don't waste time going to VCs that are not interested in consumer products and, in your case, food products in particular.
Sure.
If I may just quickly butt in, sorry. Dan, I could introduce you to Cleveland Avenue. They do all this like food tech incubator stuff if you're interested.
Yeah, that'd be great. Thanks.
Okay, we can connect offline.
Great, we got one connection going. Fantastic.
I've
All
got
the success.
my question is how Series A investors look at the entrepreneur loses either way, but if you're scrutinizing the say the trailing 3 months of revenue, and if it's down because of the pandemic, then okay, that's bad. And then you've got to somehow prove that things are going to change course once things are back to normal, if that's ever going to happen. But then if it's up, do you think that there's also going to be scrutiny around, okay, is this bump temporary? Is this growth happening just because of the pandemic and it's going to plateau after this is over? So we happen to be in the latter bucket. I guess that's a good thing. I think it's going to last well beyond the pandemic, but I'm trying to figure out that nuance in the story. How do you have conversations around revenue given how crazy the environment is?
So that you've got these two cases, one where negative is negatively impacted and one where it's positively impacted, as in your case. I do think you have to make the case as to why this isn't temporary. There's something fundamental that's going to continue in our society. I'll give you an example. We closed a deal yesterday in something that I've been involved with for a while, and we just raised another $5 million in a telehealth company. Well, COVID has proven to every medical system that they must have a digital communications channel, to their patients, and many did not. So we've been literally inundated with demand from health systems. Now, is that demand going to be temporary? We don't think so. We think this is a permanent state, of affairs, and I think that's the same case that you would have to make in your case. On the other hand, of the companies that are facing, negative challenges, I think VCs are going to look at a couple of things. How well were things going before COVID? What was the angle of ascent? What was the speed of closing new deals if you're a SaaS company, or just the pace of consumer purchasing if you're a consumer company. I think they'll look through, the impact of COVID. However, they won't necessarily invest until, COVID is over with, because then they're just funding, a lack of momentum and even just a bunch of losses rather than, sort of something that's creating value. You're just basically floating the company at this point in time. A situation like yours where you're actually benefiting, I could see somebody actually investing, right now.
Sure. It just, I guess it's unavoidable, but it seems kind of strange to me now that every bit of this has to be through this lens of the pandemic economy. And it's like, in some ways we all have to, there's all this cultural societal prognostication that has to happen to say, oh, this is a permanent shift or not, when no one really knows. Like, we're just, it's just a thesis, and you're either with me or not. I suppose that's true of any fundraise in any year, but it just feels more acute right now. And I don't know, maybe that's just the way it is.
I think there's some element of this where, I agree with you that an investor needs to share this thesis that you share about what the future looks like. And in some ways, they and you might be getting this bump where they're starting to see signs of it earlier than they would have otherwise. But I think to Mark's point, there's going to be a question of where was this business trending throughout its history, not just in the last month. And then also, like, of the people that you've acquired, of the businesses that you've acquired, like, what is sticky about them? What are they doing with this product that now makes it integral to how they proceed? So for example, we have a company in mental health that sells into employers as a benefit. And, whether or not, the initial thesis was really about the destigmatization of mental health. Now part of it has become this idea of telehealth, and also just of, people working from home and needing access to these types of services. But I think the longer term trend is, now that it's there, these people have offered this type of benefit. Will they strip their employees of this benefit? Probably not. If so, then you're really in this conversation where your impetus going forward is you've created this space. Either they'll have to turn to another solution, or you have them, and then you can continue to build on, and maybe at your prior trajectory, maybe at your prior plus X% trajectory. And so you can kind of build some kind of trend line there with the existing base that you've acquired, and then with the momentum from before through, which is a little bit less like art, I'm guessing.
Other questions?
I can fire some more. I feel like you'll notice I'm very stuck on revenue, but we, for all the past fundraisers we did, revenue was never the number one topic, rightfully so, for pre-seed and seed. And so we're always working toward this moment of, okay, Series A revenue is finally front and center. But then there's this religious debate about what that magical number is. And, the assessment over the last year is that within the range of magical numbers, has anything changed? And I guess I've kind of shifted our product priorities to push more on revenue in light of all this. Not that we weren't already, but I would say more of the product team until the pandemic was focused on, say, features that would drive a narrative, a story for a fundraise, rather than directly contributing to revenue growth. So I'm wondering if that shift in priorities was correct. I think so. And whether, again, that range of magical revenue numbers has changed at all.
Can I ask what size round, in your mind, is a Series A? Because there is no single number anymore.
Yeah. Well, and to Charlie's point earlier, or maybe it wasn't Charlie, someone else said it. I don't know if I should go into this with any expectation, right? I think late last year when I talked to some advisors about it, they were expecting this to be a $10 million round if we were to do one. I would default to trusting them on that, but who's to say that that would really be the size of the round?
Yeah, I think Series A they range anywhere from 5 million at kind of the low end up to 15 or 20 million dollars, even, depending on the size of the company and the size of the market opportunity facing the company as well. So those two things will blend together, as well as your sort of growth trajectory. Were you doubling revenue every year, tripling revenue, quadrupling revenue? What was the pace of acquisition? What was the cost? Do you have a firm business model and unit economics in place? Is another question that's going to come up. So what is your cost of customer acquisition versus the lifetime value of a typical customer for you? Those are metrics that are still very much in place in this environment. Monica, do you want anything?
No, I would agree with that. I actually think there has definitely been some hesitation and probably some shifting in valuations and or dollars, size of the rounds. But I don't think that the underlying things have changed as much, to Mark's point of the metrics. And then I don't know to that end that the expectations on revenue have changed that much either. I mean, and to that point, there are definitely, I look a lot at fintech companies. There are definitely a lot of companies where you're going to see this bizarre part of their trajectory in March. And that's to be expected. So whether it's really up or really down, you can't, you have to take that with a grain of salt. And I think everyone knows that, they're not going to try to take advantage of that much.
I think if you're a company that's not obviously benefited from, COVID, and yet you're still growing, I think tells a story of a product that is a must-have versus a nice-to, and must-have products will get funded. So just to be clear, if my prior expectations were for you to be growing at a 3x revenue rate versus last year, and you only grew this year at a 2x revenue rate, well, that would be damn good in this environment. That would tell me something about how important your product is and how much pain it's solving to your customers.
That's a very interesting point. I hadn't thought about it, but it's almost like if we maintain this kind of growth, and we actually, I've been leaning in toward the pandemic narrative that, this is we are in that bucket of companies that's obviously benefiting from it. But actually, if I kind of remove ourselves from that situation, and you match it with that strong revenue growth, perhaps that's even more compelling. That our success is independent of the situation right now.
Absolutely. Let me ask a question for all the entrepreneurs then. How are you thinking about using this period to improve the quality of your teams, improve, your hiring processes and internal processes?
Well, and someone shut me up at some point, but we've been a distributed company for 3-4 years now, between Brooklyn and Denver, and we've worked really hard to make the two offices feel equal, but there's no denying Brooklyn is the HQ. And I will say the last month has really been, this whole experience has been an equalizing force for us in a good way. A lot of the Denver employees who would normally go to each other for a question realize now that it's equally easy to ask someone in Brooklyn. So I think that kind of communication has really improved in these circumstances. So we're leaning into that and trying to, and I certainly hope that lasts beyond this work from home situation. I guess it's fortuitous timing, but we also did a review of our company values in February. So we're trying to be extra diligent about putting them into practice right now. Everything becomes harder to follow through on when you're remote. Yeah, so thinking more about those things, and we're playing games. We're doing happy hours every Friday, doing like Pictionary or whatever. And again, those are things that, hey, why not continue to do that after this is over? Because we have that Denver office. Sure, we should do Pictionary happy hours. So I think coming up with new rituals that work right now is a fun way of coming up with things that might work beyond the current situation.
I think that's super interesting that you've been remote for the past several years across 2 cities, because we've been thinking a lot about our company and it being kind of a physical goods business. We've always kind of had that mentality that we have to be in office kind of to do the day-to-day, and somehow we've been able to keep operations and the service running with very limited hours, and we've all been remote now for just over a month, and it's been working. So I think we actually also hit pause on a new office space that we were thinking of expanding to, just for a no-brainer. It's kind of just not necessary right now. We'll make do with what we have, and I think we're really going to reevaluate kind of our stance on working from home and remote positions now that we know we can kind of get through this and continue to build and make progress. So super interesting to hear that you've been able to do that for the past several years.
I actually have a quick question. This might be speculation, but I noticed in the first session that I think someone mentioned that, in order to make Series A type decisions, for example, investment decisions or larger check decisions, investors have to spend a lot of time with the team, and spending for example a whole day with the team. How do you imagine that might work for a team that stays distributed post Corona environment? Like spending time and getting a sense and vibe for the team. Do you think it'll be just as feasible and effective for you, or not?
I think we're kind of in the beginnings of figuring that out. But I expect that to be a case that we encounter much more often on the back of this. I mean, I was curious to extend Reggie's point and see how many people and Nick's are thinking about building more of their team fully remote, not even in necessarily like your Colorado office, et cetera. Because there's access to talent and all of that. And I think there's a lot of trends there. So yeah, we're still figuring it out. I think there's still definitely a question of wanting to meet the founder in person. I think I found I've been able to have pretty in-depth interactions built over Zoom. And maybe it just takes, maybe you put in a little bit more time, but it's not really that different fundamentally, I'm finding. So I don't know. I'm curious to see how the team evolves. I'm definitely seeing it work for some of the companies that I'm diligencing currently.
And then sorry, just to follow up off of that, it's funny because we've also been remote since the beginning, but then also moved recently from the Valley, kind of did the switch from Bay Area to New York, actually. Or how are you finding this, propensity to be more inclined towards Bay Area companies versus elsewhere? And I know that's more of a general question, but I hear VCs talking about all the time that, we're location agnostic, but then you also do see a lot of favoritism for Bay Area central companies.
I'm gonna let you answer that, Monica, because I tend to focus east of the Mississippi.
Yeah, I mean, I personally, like I said, moved out here from New York, and so I still try to invest a lot in companies in New York. So I spent a year spending half of my month in New York and half in SF, and in that time, I invested in a few companies in New York, and I felt like I was definitely better able to help them when I was on the ground there, especially with the early stages until another investor came in and could also be there. So I don't know how much of that I think it's symbiotic. I think it goes both ways. And I don't know how much of that will change. But if you have a situation where more founders are, sole points and the team is distributed, then maybe that becomes far less relevant, But I'm definitely also looking across the country. So we'll see.
I want to contribute to that because I think that whole East Coast West Coast dynamic is super interesting to me. We have investors in both California and New York, but we love having people locally here that we work with that can come by the office, that can say hi to the team and just have some kind of presence in what we're doing. But I would say the community here is a lot better than I think most people think. I think that some of the best funds are hidden to some extent, and it's really hard to kind of come across them. But I'm a huge fan of the community that exists here. It's why we've chosen to build a company here. But yeah, there's sometimes just a little bit harder to find.
I mean, San Francisco's just a bigger market with more, venture firms. So the math favors, the Valley today. I think that's, been changing, fairly rapidly over the last decade. When I started my first seed fund in New York, we were one of 3. Today, there are over 200 seed funds operating in New York. So it's changed dramatically. I also think it depends on the type of product you're selling. If it's a consumer product versus a fintech product versus a B2B enterprise product. I think New York actually, for consumer products, has a ton of venture firms. I think we're more bereft of a lot of B2B enterprise firms, to be honest. So like on our deals, when we go looking for larger rounds, we only have about maybe 5 to 6 real firms to do a Series B in New York. We have to go to the Valley for that kind of capital.
Can I ask, this is taking it a little different direction. Given that parents are now much more in the press about them dealing with homeschooling and balancing work and childcare, do you see a change coming in terms of interest in FamTech, both on the B2C and B2B side? On the B2B side, I imagine that would be benefits.
On the B2B side, there's definitely an interest in mental health. I think we are an investor in Talkspace, which started out as a B2C company, but the growth of late has been all B2B oriented, as companies are getting much more interested in their employees' mental health. So I don't know that VCs have narrowed in into sort of female. Is that what you called it? Femtech? Was that the term?
No, family tech.
Family tech. Sorry, family tech. My apologies. I don't know that they've narrowed in on that as a category so much yet, but I think if there's a real market there, they will.
Can I say, as an employer, I'd be very interested in learning more. It's something that didn't really cross my mind much until these past 4 weeks. And there's because I think I'm the youngest person at our company. Most of my employees are parents, and their spouses are also working. So the last 4 weeks have been very challenging. The daycares have closed. So this is the most I've ever thought about childcare. Every call with every employee is like, how's he doing? How's she doing? Checking in on the twins or whoever. And it really impacts their mental health too. I see the stress when their kids are sick and there's no help available. So